Hi guys, welcome back. We're back with another video, and in today's video we're going to talk about the engulfing pattern. Right, if you can actually master this simple pattern, you can become a sniper. Right, but remember, I always preach selectivity, right, when trading. Right, you have to be very selective. You can't just trade every day or trade just because the market is open. Right, you need to be selective. Right, so we're going to talk about, it's a very simple pattern. I'm sure when you're actually learning, when you started learning about forex, right, you learned about this pattern, the bearish engulfing or bullish engulfing. In this example, this is a bearish engulfing. Right, if you don't know about this, you can watch some videos. Right, there's a lot of videos that can explain what a bearish engulfing is. Right, so it's a very simple pattern. Right, so when this happens, right, we are interested in this region right here, right, this area where the bearish candle actually engulfed this candle. Right, so this is the area that we are focusing on, because this area will be our entry in future. Because remember, if price moves away, we'd love to see price come back to that area. Right, so this becomes your supply zone. Right, so you can actually mark this up, right, as your supply zone, and wait for price to come back to that area. Right, so for anything that you're gonna trade, guys, be it a different strategy, you need rules, or you need a checklist and a trading plan, of course, with that strategy. So the first thing, the structure must be very clear. Right, in this example, we can see what price was doing. Right, we can see what price was doing, breaking structure. Right, structure must be clear, and the level counts must be clear to see. Remember, when trading, we trade the market maker cycle, so you need to count those levels. Right, you need to count those levels, because they'll help you identify these peaks, right, that we want to trade from. Right, and the size of the pattern is very important. Right, the size of the pattern is very important, guys. Some engulfing patterns are very huge, maybe in the higher time frame, so you need to find a way as you go down to your lower time frames to actually get a good entry. Right, so as we can see, we had a bearish engulfing pattern right here, right, and as price moved from that area, we broke structure. Right, and as you can see, we also broke structure down there with pins. Right, so price then returned to this area for the first time. Right, so the first pull back to an order block makes it a high probability trade. Why? The zone is still fresh. Right, those unfilled orders are filled. Right, the zone is still fresh, meaning there's a higher chance of price moving away, of that, or that trade playing out. Right, and the risk to reward ratio must always be at least 1:5. Right, always at least 1:5. So you can see these types of trades. If you actually go to your shorter time frames to get a better entry, you can actually risk less and get a very good amount of pips to that TP. This is actually in the H1 time frame. Right, so always have a checklist, guys. You can't just trade without a checklist. Right, so very simple pattern. Right, as you understand what's happening. Look at what we have. We had a bearish engulfing pattern there, but for this one, remember, price had already hit this area many times, so this was not really a very high probable trade. But you can catch these moves, right, as you can see. Right, the risk right here was 4 pips. All right, risk was 4 pips, and then target down there at that structure point is 20 pips. All right, so if you can trade that way, I'm not saying go for 20 pips, right, but I'm just saying, be it scalping or be it swing trading, right, you can apply the same concepts. Right, so you can see we also had another engulfing pattern here, very clean engulfing pattern, as you can see right here. Right, so price then, there was a lot of liquidity above this area. You can see price actually got to that area for the first time. Right, and you had a nice trade, another 4 pips of risk. Right, so if you can trade that way, with actually a trading plan, you can actually get good trades just by trading that pattern. All right, so here's another example on Nasdaq. Right, you can see what we had right here. Sorry, we had bullish engulfing. Right, and because of that area, we actually saw price breaking structure, giving us a higher high. Right, but always look to the left, because look at where price is reacting. right? Look at where price is reacting. So price then actually returned to this area, right? Remember, this is our points of the area that we actually want to enter, right? So look at what price did. Price even gave you double confirmations at that demand zone, and we also see another demand area right here, and we can see how price came back to those areas and gave, moved away from those areas. Even here we had a bearish engulfing, price returned, right? Price does this sometimes where it gets back to it gets back to the supply level fast without really moving away, right? I hope you get what I'm saying, right? It's too fast, because I mean, in this case we have a nice correction back to the area, but I prefer this, right? So we had a nice area right there, a nice pattern also, and price moved, right? And price moved. So you can actually catch pips. I mean, look at that. You had a nice engulfing pattern right here. Look at what price did when price got to that area. A couple of pips, and this is Nasdaq. I mean, it pays, right? Just by trading that pattern. All right, guys. So always have 1 to 3 or more factors of confluence when looking to trade this pattern, right? Always remember to trade in line with the dealers, market makers, by following the market maker cycle. And always remember to trade this at the right time, guys, because such opportunities can happen during Asian session. I don't really like trading Asian session. I like looking for entries around London and New York, right? So you have to be disciplined, right? So sometimes you might see a very good setup, and everything lines up around that Asian session time, and then the dealer will just come hit the stops one more time during London. It happens, right? And then that's a loser, right? So I'd rather trade after the stops are hit, right? So here's an example, a very clean example. We had a reset right here, as you can see. We had a reset. This is actually US 30, I think, or Nasdaq. We had a reset right there, and as price was pushing up, look at this pattern, right? Bullish engulfing pattern. And because of that pattern, that is the reason why we can see liquidity being grabbed right there above those highs, right, giving us a higher high, right? And look at how price then reacted when it came back to this area for the first time. So this was a fresh zone, and this one actually has some confluence, right? This was a bounce off the 50 EMA, bounce off the 50 EMA, right? So we're actually going to look at a chart, right, and I'll explain this move. This move actually was pushed because of some news. I think it was CPI or something. Yeah, but it's all a structure, guys. If you understand your structure, right, you'll be good. Right, so let us look at some charts. All right, guys, welcome back. Okay, so looking at this chart, this is what I actually identified. Right, remember, you should always consider the cycle. Right, so in this case, you can see what happened right here. We had a reset, right, a nice move up, breaking structure. We can see some, where some highs up that area. Liquidity was grabbed there, and price pushed up, so we had a higher high. Right, so price was actually coming back to this area for the first time. If we look at it from the H1 time frame, right, or on your TDI, as you can see, we had a half a Batman type formation. On your TDI, this is what you had, right? You had a nice shark fin, right? You had a nice shark fin at that area. Okay, so this was actually a reset, right? Because from this area, we can identify the reset, right? We can identify pushes, level 1, right? Not really clean level, level 2, and then level 3, right? As you can see. Yes, right? So then you had a nice half a Batman, right? So this was our reset, right? But this was just a move back to that H4 clean order block with confluence, right? So there was actually some news. I think it was CPI. Right, so as you see how just by understanding the cycle and what the dealer is doing, right? Because look at how the dealer held it, right? Look at how the dealer held it at this area. A lot of people getting trapped, right? Orders is we're getting, people are buying, some were selling, right? And then he hits the stops because if you look at this, there was, you know, some liquidity just above that area. Nothing really, yeah, all those stops were hit. That was just a reset, right? So, you know, these are the things. I mean, such you can actually use it, you know, for very good confluence when you trade. All right, guys, hope you learned something from this video. If you're new here, don't forget to hit that subscribe button and turn on the notification bell. You can also check out our free Telegram channel. Find the link in the description below. Also, tell us where you're watching us from. Cheers.